Hello and welcome to the Mutual Fund Guide. It's all about your funds and your returns. I am Muralidhar. Joining me on the show today are Devang Shah, Deputy Head Fixed Income at Axis Mutual Fund, and Hemant Rustagi, CEO at Wiseinvest Advisors. Gentlemen, welcome to the show. Thank you so much for joining us today. Today we will focus on income funds and also on equity fund queries later in the show. But before I do that, I need to take our viewers through the important funds of the day. They are there on your screen, as you can see. Most of them are small cap funds. You know, there is a small cap rally and a mid cap rally that we are witnessing in the markets. If I see ICICI Pru small cap obviously is the top winner with 2.39% gain. HSBC multi-cap equity fund 1.63%, HSBC small cap equity fund 1.59%, and SBI large and mid cap 1.38%. And at the bottom of the barrel, you have Baroda mid cap fund, Sahara Wealth Plus fund, Quant small. It's surprising that a small cap fund has just made only 0.17%. DSP mid cap fund has made just about 0.17%. One of the reasons, viewers, is because the universe of mid and small cap is so large. It depends on which portfolio, and luck also matters here. You know, if in a small cap fund a particular bunch of stocks which have run up 10, 15, 20% are there, then you're lucky you will have it. But if it is not there, you can see on your screen they would not be there. But interesting trend that I'm noticing here, if we go to the next category, that is the thematic funds. You have HSBC Infra Equity Fund. All infrastructure funds are doing very well. 2.16%, IDFC Infra Fund 1.69, Sundaram Infra Advantage Fund 1.67, and Reliance Power and Infra Fund 1.65. And at the bottom of the barrel again you have SBI PSU Fund, Public Sector Fund, IDBI Healthcare Fund, that's in the negative territory, Tata Digital India Fund, and ICICI Pru Tech Fund. Technology stocks are not really doing well because when rest of the market does well and the currency appreciates, tech stocks go down. That's why tech funds are not doing well. Don't worry, if you're a long-term investor, you need not worry. But do remember that this rally of small and mid cap should not make you should not get carried away by this rally, because people typically tend to come in when prices rise. But that's a different question which we will keep answering. But let me now welcome Devang. Devang, thanks so much for joining us. My first question to you is on income funds. You know, yeah, Devang, can you hear me? Yeah, yeah. Good afternoon. See, we just had a look at small cap and mid cap funds, but on the debt side, the AMFI data shows that there has been a consistent net outflow from income funds. As you can see on the chart, for the benefit of viewers, income funds have seen a net outflow of 37,000 crore in October, another 6,500 crore in November, December 3,400 crore, and the latest in February, 4,214 crore has been the net outflow in income funds. Devang, why do you think people are pulling out money from income funds?
So I think when you look across at the overall fixed income basket, what has happened is in the last 6 to 12 months, we have had interest rate hikes. So if you look at April to October or April to December, people were too worried about the interest rate environment and people were expecting too many rate hikes. So generally when the rate hikes happen, we see outflows from income funds, and that is the reason why we have seen some outflows. If you look at industry at large, I think there has been a rebalancing of funds. We have seen significant amount of inflow, specifically in the last 2 months, in money market schemes, low duration funds, ultra short term funds. Liquid funds have significantly grown, and also from a perspective of a clean short term category, the AAA higher rated short term category started seeing flows. So our take is that yes, there has been some outflows in the last year on account of uptick in interest rate, but going ahead, we believe so that with inflation falling down and staying below the RBI mandate of 4%, also easy liquidity conditions, we believe so that mutual funds will start receiving flows in debt funds, specifically the short to medium term segment.
Right. Devang, hold on to your thoughts. Let me bring in Hemant also here. Hemant, what are you advising your clients as far as debt funds are concerned? Specifically income funds, there is large outflow. Is it time for people to come back into income funds because now interest rates are going to go down? It's on a downward trend.
Well, I think only clearly, I totally agree that, what happened in 2018 clearly was because the interest rates were going up. The debt fund generally in performance disappointed, and obviously there were other issues of downgrades, and also people kind of took out money. I think there is always a place for debt fund in the portfolio. Clearly, you need to be very clear about what is your time horizon for your investing in. But my personal belief is that if you're investing for a couple of years, I think the best option for you would be, in the current scenario, to go for a short-term income fund.
Right.
If you're looking at a parking of fund, you should be looking at liquid fund or a low duration fund. Clearly, it depends on whether it's 1 month, 2 months, or 6 months. Within that, I think you should be looking at these 2 or 3 categories. If you want to take a little bit of risk and your time horizon is 3 year plus, maybe then what you can look at is some exposure to credit risk fund.
Okay.
Not too much, but generally I feel that the core of your debt fund portfolio should be short-term income fund.
Short-term income fund. Very interesting. I also have in front of me, Devang, let me come back to you. Axis short-term income fund has given roughly about 4.5% in the 6-month bucket, and 1-year returns have been 7.18. If somebody wants to invest today in a short-term fund, what is the kind of range one can expect?
Well, it's,
can you hear us?
Yeah, it's so from a 1-year perspective, our understanding is that when we can look at the returns, today the YTMs of these funds, so short-term funds, are in the band of around 8 to 8.25 band. We believe so that easy liquidity environment, as well as there is a possibility of 25 to 50 basis of rate cuts in this financial year, and hence we think so that these funds can deliver around 8 to 8.5% on returns from a 1-year perspective.
Right. So, what about credit risk fund in this kind of a market? Because credit risk as a category means that there is a risk. So, is there a higher reward there also?
So, see, our take on credit risk is quite different. We linked the credit risk funds to the growth parameters in the economy. We find and we believe today is that yes, some of the high frequency indicators recently have started to show slowdown, but the broad-based recovery in India continues. We are quite bullish on macro India, and we continue to believe that growth will continue at 7%. Secondly, indicators like credit flow, rural spending, consumption has been very, very strong, and we continue to believe that credit cycle will start and will continue to show uptick in the near future. Today, because of noises and certain downgrades which have happened, the credit spreads have significantly widened. As compared to 6 months prior, where credit AA rated papers were available at 40 to 50 basis over AAA, today they are available at 125 to 150 basis over AAA funds. So we believe so this is the right time for an investors to start looking at credit funds. Investor who understands the risk on credit and who should do a selective approach on credit funds and should start looking to add credit funds onto the portfolio.
Right. There are a couple of other funds in among Axis funds. One is Axis Treasury Advantage and the other is Axis Strategic Bond Fund. Now, how do you see these funds? Can they be used by retail investors, especially Treasury Advantage? Does it mean that you invest in Treasury Advantage only in short-term government paper?
See, Treasury Advantage falls into the low duration category, and what we advise clients who are looking at parking of funds for 6 to 12 months perspective, low duration category is the right category for investment horizon. So, investors who are looking at shorter term horizon and looking at parking of funds should look at low duration as a category. Axis Treasury is one of the funds in our bouquet which is fits the low duration category. The investment there is into money market assets and short-term corporate bonds, 1 to 3 year short-term corporate bonds.
Oh, okay. I thought it was, government treasury paper that one was looking. Very interesting, short-term paper of this. What is the strategic bond, Axis Strategic Bond Fund?
So, SEBI has categorized various categories for mutual funds. We have starting from liquid fund, going up to all the way to income funds, long duration funds. Strategic Bond Fund is a product in our bouquet which is offered into the medium term category. Investors who are looking at 3-year investment horizon, who have more orientation towards AA credits, and who are okay with 2 to 3 year modified duration should start looking at medium term strategies. Strategic Bond Fund is placed into the medium term category for us.
Right. Before I come back and take your views on inflation, growth and interest rate cycle, I will come back to Hemant. Hemant, the strategic bond fund is interesting. How does it compare with fixed maturity plan? Is this a better option compared to FMP or?
You see, what happens is, if you look at FMPs, they're actually very popular with the retail investor and HNI investor, individual investors basically. Those who can actually lock in their money. And what typically happens in FMP, because the closed-ended structure, if you lock in money at a certain yield and you know that irrespective of whatever happens to the interest rate, you will not be impacted because you're going to get certain percentage after the maturity. Now, any other open-ended fund, despite the fact that whatever the strategy may be, the fact is that they're all market-linked product, there is going to be some amount of strategy. So what I have seen from my experience and interaction with the clients is that someone who is very clear about the time horizon, they prefer fixed maturity plan, because what we have seen is the interest rate cycles are getting shorter, erratic. So I think for retail investors it's becoming slightly difficult to cope with that. So you see a lot of retail investors, individual investors preferring to look at FMPs. So obviously what has happened is earlier investors are going into AA kind of FMPs. After what we saw happening in the last 4 or 5 months, most investors are now looking at AAA or maybe AA, not going below that. So I think clearly the preference is, from the investor point of view, is for FMPs.
Absolutely. Let me now look at the overall interest rate scenario. Devang, what is your view? Bond yields are around 7.54, 7.56. Do you see bond yields going up further? What will be the liquidity situation given the inflation is now again rising?
Surely. So, our take on macro is, at this point of time, is very, very conducive for rates. If you look across at the near-term inflation prints, I think next 6 odd months, inflation continues to remain well within the RBI mandate of 4%. Also, if you look at the near-term high-frequency indicators, specifically on growth, they have started to show some kind of softness. External environment looks comfortable, currency is stable. So, our view is today, the macro story in India is quite conducive for rates, and there is a possibility that at this point of time where CPI continues to remain benign, RBI can focus on growth and deliver rate cuts. We believe that for the year we can see 1 to 2 rate cuts more. Growth is showing some sign of softness, but it is not a broad-based slowdown. And hence the rate cut cycle will not be very deep, it will be shallow. We might not see more than 25 to 50 basis of rate cuts in this cycle. That's our thoughts.
But then Devang, the rate transmission is not happening. Banks are citing costs. Today the cost of rising deposit is not easy, given the fact that mutual funds are competing for the same set of funds. Banks are reluctant as far as cutting rates is concerned. One thing is the RBI gives a different signal and the ground reality is different.
Right. So I think we have started seeing in the last 1 year or so that base rates have started to see some softness. I think we have only seen 1 rate cut. We have not seen more rate cuts. So once the couple of rate cuts gets delivered, I am sure on both fronts, deposit as well as the lending rates will start getting down. So the transmission will happen. It happens with a lag, and we will see it in the next 6 to 12 months.
Right. Devang, thank you so much for giving your perspective on investment in debt funds, your outlook on markets. And on that note, we need to slip into a short break, but we'll come back and take investor queries on the other side. Welcome back. You are watching the Mutual Fund Guide. We will take queries from investors in this segment, but I also want to tell investors that AMFI has been running a campaign on mutual fund सही है, मगर कौन सा म्यूचुअल फंड सही है, कौन सा म्यूचुअल फंड सही नहीं है, ये जवाब हम BTV में आपको देंगे. हमारे साथ एक्सपर्ट्स हैं. On that note, let me take the first query. Mr. Dingra from Indore has mailed us this question. He wants to start investing in MFs. He is a new investor. Kindly guide me on which sectors I can invest in. Please recommend some best sectoral funds to invest in. He wants to invest in sectoral funds.
Clearly his decision to start investing in mutual fund is a good one, because I believe that whatever kind of investor you may be, there are products for you. But he also mentioned that he wants to start investing in mutual funds without even knowing what kind of time frame he has, because time horizon is very, very important in choosing the right asset class. He wants to straight away jump into sector fund and thematic funds, which I don't think is a great strategy, because even if you're an informed investor, you come to mutual fund for level of diversification. So I think my suggestion would be that you should begin investing with some multi-cap funds, especially the one which had bias towards large cap, maybe 60-70% large cap, the rest in mid and small. Once, if he's a new investor, he needs to become familiar with ups and downs of the equity market, understand how it functions, and then look at sector fund or thematic funds. I think important the thing that every investor needs to look at is what kind of exposure your portfolio has to different sectors already.
Exactly.
So for example, if I were to look at some sectors, I would say I would look at maybe banking and financial services, or if you need to take a bet where you think that if you're okay with some amount of volatility but in the long run can get good return, is infrastructure you can look at, or a consumption or a rural theme. There are funds for each of these themes and each of these sectors. But the point is that you need to see how much exposure. For example, banking, if you see, if you're in a multi-cap fund, most multi-cap will have very high exposure to banking and financial services. So it doesn't make sense for you to then separately go and invest in banking and financial services. So I think it's very important, be very clear about your time horizon, how much you for what period you can invest. Absolutely. How are you going to be investing? Are you investing systematically or lump sum? Look at these two and then start with multi-cap and then maybe add sector fund. Absolutely. But I've also mentioned like a couple of sectors or themes which one can look at today.
Absolutely. I want to add to what Hemant has said. If you look at any diversified fund, multi-cap or even large cap, most fund managers focus on banking and financial services, consumption, FMCG stocks, IT, auto to some extent, and to a limited extent metals in this kind of a market. The 5 or 6 key sectors that drive the markets and drive equity returns, you will find them in most funds. Fund managers end up chasing them. So if you are aware of the markets and how they function, you could track them, but then it's some sectors will do well at some point and they may not do very well at some other point. So to avoid that disappointment, as Hemant suggested, go for a multi-cap fund. The next query, Bhavesh Shah from Mumbai. He has the following funds in his portfolio: Canara Robeco Short-Term Fund, IDFC Tax Advantage ELSS, Canara Robeco Emerging Equities, ICICI Pru Blue Chip, Franklin India Prima, Franklin India Smaller Companies, and Mirae Asset Hybrid Equity Funds. He says provide an outlook on all this portfolio. If I need to replace any funds, do I need to do that? I think there are a little too many, some overlaps are there, I think.
Well, I think broadly, if you were to look at independently at the quality of the funds, I would say I think he has made a good selection. The only problem is that it's very important to understand whether his allocation to different assets is right or not. For that, the information you require is what is the time horizon and what other kind of investment are there in the portfolio. Many times, you already have money in fixed deposit or other instruments, so we really don't know. Assuming that he is investing for the long term, and that's the reason why he is investing in most equity fund. There is a short-term fund and there is a hybrid fund. So I'm assuming that short-term is for a couple of years and the rest is all long-term money. I would say broadly, I think the fund selection is quite good. I would only suggest one change here. There's a Frankly India smaller company fund. Right. The fund was doing very well for the last couple of years, not done well. Most funds have not done well actually during that period. But what I'm seeing is I'm seeing a lot more volatility, which never used to be there in this fund before. So in that case, my recommendation would be maybe he can look at HDFC Small Cap or L&T Emerging Business Fund. One of these funds in place of Frankly India smaller company. The rest of the funds, I think they are all good funds. Like for example, there is a Prima fund, which is a mid-cap fund. It may not be among the top performing mid-cap fund, but it's a very, very stable fund. Right. So if you're an investor who want to have exposure to mid-cap, but not looking at taking too much risk, I think that's a good fund. So overall, I think the portfolio is good. Just one change I feel in the small cap fund you can consider.
Right. The next query. Prince Kamboj is on the line from Karnal. Good afternoon, sir. What's your query?
Good afternoon, sir. Yeah. Hello, good afternoon, sir.
Good afternoon. Go ahead.
Sir, my name is Prince Kamboj. I am calling from Karnal, Haryana. Hi. Sir, my query regarding mutual fund investment. I have been investing 19,000 per month. My 5,000 in SBI Blue Chip, 3,000 in HDFC Mid Cap, 2,000 in Reliance Small Cap, and 4,000 in Axis long-term equity, that is ELSS fund, and 5,000 per month in Mirai Asset India multi-cap fund.
Okay.
So I want to know if my fund selection is okay, or there is any need of change required, the need of change in fund selection. So basically, one of my friends told me that I need to change my SBI Blue Chip since this fund is not doing well. So I should change this fund. So similarly with Reliance Small Cap, someone told me that I should change this fund to HDFC Small Cap. Okay. So I want. So please help me for this.
Yeah, Hemant, your advice.
Well, I think a couple of things you need to look at before I talk about which fund should be there in the portfolio. Broadly, I think your fund selection is good. I don't think you really need to make any changes in that. I agree that SBI Blue Chip hasn't done as well as some of the other large cap funds, but I think that happens with every fund. You can continue with that fund. So clearly what we are saying is that one thing that you need to do is you define your goal, you're investing for long-term goals. Set a target for each of these goals, work backwards based on assumed rate of return of let's say 12%, if it is 10%, 10 years and above. Find out how much money you need to invest, align your investment to each of the goals. That's the right way of doing it. You have 4 or 5 funds. I think like I mentioned earlier, I think the fund quality is good. At this point in time, I don't really think you need to make any changes. You can continue with your existing portfolio right now.
Okay. All the best, Kamboj, with your investment. Save, invest and prosper. Hemant, thank you so much for joining us and taking our viewers through all their doubts regarding mutual fund investment. That's all in this edition of Mutual Fund Guide. Save, invest and prosper. With that right guidance right here on Business Television, I would thank all the viewers for watching us.